years, Bank of America strategist Michael Hartnett has been one of Wall Street's more outspoken macro thinkers. A man who watches the tides of money, politics, and psychology as if they were one connected system. His latest prediction, however, caught even seasoned investors off guard. In his most recent Flow Show report, Hartnett outlined a scenario that, if history were to repeat itself, could send gold climbing to $6,000 per ounce by next spring, up roughly 50% from its current level of around $4,010. The forecast wasn't just a wild guess. Hartnett's team studied the last 4 major gold bull markets, stretching back half a century, and found a pattern. During those upcycles, gold prices climbed an average of about 300% over roughly 43 months. If that historical rhythm were to play out again, it would point toward a significant gain, though not necessarily a repeat of the exact magnitude given today's already elevated prices. But in typical Hartnett fashion, he added a line that most headlines ignored: history is no guide to the future. His argument hinges on what he calls the debasement trade. Around the world, governments are piling up debt, central banks are quietly buying record amounts of bullion, and investors are growing skeptical of paper money's long-term value. Hartnett sees echoes of past cycles when currencies weakened, inflation expectations rose, and gold reasserted itself as the ultimate safe haven. In such a climate, he suggests, even a partial repeat of those historical gains could be explosive. Still, Bank of America's report isn't a promise. It's a scenario. For gold to reach $6,000, the world would likely need to experience a perfect storm. Aggressive monetary easing, further loss of faith in fiat currencies, perhaps a geopolitical shock, and a continued rush by central banks to diversify away from the US dollar. Without those catalysts, gold could remain strong but grounded. Whether or not the metal ever touches that lofty number, Hartnett's message is less about price targets and more about psychology. When a senior strategist at one of the world's largest banks openly models $6,000 gold, it says something about how fragile confidence in modern money has become. Disclaimer: this story is for informational and educational purposes only. It reflects publicly reported statements and interpretations of Michael Hartnett's research, and should not be taken as financial advice or a definitive forecast. Markets are volatile, and even historical patterns can fail to repeat. Always do your own due diligence before making investment decisions.